You believed your future was safe, built on a steady job, steady paychecks, and a pension you'd never outlive. But then, in late 2022, something nobody saw coming nearly destroyed the retirement plans of millions in the UK. Pension funds lost over £425 billion in value in the year of bond market turmoil. That's not an abstract number, that's life savings evaporating. In this documentary-style video on Tousi TV, we will uncover how unexpected shifts rocked the system, how ordinary people got caught off guard, and what tools you can use now to protect your future. Stay with me as we reveal the strategies, the surprises, and the safety nets you need. This isn't theory, it's your future at stake. You get paid, you budget, you try to save, but somehow weekly bills, monthly obligations, and inflation keep edging in. If you're honest with yourself, you've asked, will I ever have enough to retire? Too many late nights, sacrificed weekends, skipped vacations, all for the promise that the system works. And yet, every year you watch your peers talk about retirement pots and investments, and you feel left behind. The fear creeps in. What if I work all my life, and it still isn't enough? That question isn't paranoia, it's real. And now we're going to see how the ground beneath many retirement plans began to shift. By the end of this video, you'll know exactly what happened behind the scenes in 2022 that shook the UK pension system. You'll learn 5 practical strategies, backed by real tools and software, that can help you protect and grow your retirement, even when markets quake. And tip number 5, it might be the single most important move you haven't made yet. Watch carefully, this journey could change how your future plays out. We will divide this portion into 5 segments. Each connects to real events or data, but always with simple clarity. Part 1. When stability cracked, the UK pension shock. In September 2022, a wave moved through financial markets that few saw coming. The UK government had introduced a mini-budget with massive unfunded tax cuts. Market confidence wavered. The prices of long-term government bonds gilts began to collapse. For pension funds that held these long-dated debt assets or used liability-driven investment, LDI strategies, the losses were immediate and brutal. These funds faced margin calls they couldn't meet. They were forced to sell assets to raise cash, and in doing so, caused further market damage. One fund would sell, pushing down prices, triggering more selling. It was a vicious cycle. Pension values fell by hundreds of billions across the system. Even funds believed to be solid weren't immune. The illusion that big institutions are safe cracked in real time. Part 2. The silent drains on wealth. The loud shock of 2022 exposed an even quieter, more pervasive threat. The consistent leaks in what you think you own. Debt interest payments. Unused subscriptions. Lifestyle inflation. Hidden fees eaten by mutual funds or advisors. These leaks aren't dramatic, but over decades they compound. Imagine you spend £20 a month on a service you forgot you even subscribed to. That's £240 a year. Over 30 years, at 5% growth, you've lost thousands. Many retirees panicked in mid-2025, withdrawing billions to cover tax changes or cash shortfalls. The message: don't just worry about big crashes. Watch the drip. Use the analogy. You might not hear a slow leak in your roof until the ceiling falls in. Let's prevent the ceiling from ever falling. Part 3. When trusted systems fail. You believed your retirement was protected by pension regulators, oversight, and the safe institutions. But even those failed tests. Take BHS, the British retailer whose collapse is now a cautionary legend in pension mismanagement. When BHS went under in 2016, it left a pension deficit estimated at £571 million. Sir Philip Green eventually agreed to pay £363 million into the pension scheme, after regulators pushed hard. But many former employees still lost portions of their promised pensions. The parliamentary inquiry found that a core motive behind the BHS sale was to shed liability for the pension obligations. The lesson: just because an institution promises safety doesn't mean it stays safe. Trust but verify. Now imagine that your retirement depends on systems just like these. Part 4. How software and tools become defenders. When systems shake, you need tools that keep you alert. This is where software becomes your frontline defense. Think of finance trackers, budgeting apps, dashboards that visualize your cash flows and investments, ones you check daily, not yearly. A simple example: an app flags a subscription you forgot, or shows that 2% of your portfolio is eaten in hidden custodial fees. Imagine watching your portfolio shift in real time when the market trembles. You can respond faster, reallocate sooner, avoid being a passive victim. Combine that with trusted educational platforms like Tousi TV that surface anomalies, trends, and warnings, and you have a dynamic system, not a static hope. In fact, many of today's top investors treat finance apps as indispensable, as necessary as your banking app. Because when things crack, you want early warning. You don't want to discover a problem when it's already overwhelming. Part 5. 5 key strategies to protect your retirement. Here are 5 strategies that can help you build resilience. These aren't gimmicks, they are grounded, practical moves. 1. Automate first. Invest before you spend. Set up automatic transfers to savings or investment accounts immediately when you're paid. If you never see the money, you're less tempted to spend it. 2. Build multiple income streams. Don't rely solely on salary and pension. Side businesses, dividends, rental income, consulting, even content creation can diversify your risk. 3. Start compounding early. The difference between starting at age 25 versus age 35 that decade can yield massive gap in end value. Use simple illustrations. Invest £100 per month for 30 years at 6%. How much do you lose by delaying 10 years? 4. Audit every cost annually. Subscription purge. Check your banking fees, fund fees, advisor fees. Even 0.5% in excess fees each year compounds into large losses. 5. Commit to constant education. Markets change. Regulation shifts. Tools evolve. If you stop learning, you become outdated. And that's why a platform like this exists, to help you stay ahead. Pause a moment. Which one of the 5 strategies do you already use, and which one feels the hardest? Drop your answer in the comments. Let's see who's auditing costs, who's automating, who's diversifying. If you found a new insight here, hit like. Share this video with someone you want to see win their financial future. Because every person who avoids the traps strengthens the entire system. You've sat through the background, seen the danger, absorbed the solutions. Now it's time to act. I publish finance, retirement, and wealth-building insights regularly. Subscribe now so you don't miss the next tip. Next, I'll take you deeper into 7 salary mistakes that drain your wealth. It's a video that could help you protect what you make, not just what you save. Thank you for watching. Let's redefine your financial future together.